health insurance premiums, and your paycheck. One of the largest health insurance costs is premiums, and you'll probably have to pay a portion of them. Here are the learning outcomes for this video. By the end of the video, you should 1. Know that employers don't typically pay 100% of health insurance premiums. 2. Understand how premiums are paid and deducted from your paycheck. 3. Understand factors that can change the amount of premiums. And 4. Understand some real dollar examples of premiums. Let's get started. In the previous video, we learned that premiums are the money paid to the health insurance company in exchange for providing health insurance. Premiums are high because they're meant to cover the insurance company's claim payments, business expenses, and profits. We also learned that premiums aren't the total cost of health insurance because in the event healthcare expenses are incurred and a claim is filed, the employee will still have to pay some share of the claim costs. Premiums are so much money that many employers choose not to pay all of them and therefore pass some of the cost onto the employee. The employee's premium cost responsibility will vary based on the employer. Some employers might pay 80% of an employee's annual health insurance premiums, whereas other employers might pay 90%. Premiums are paid to the health insurance company by the employer. If the employee is responsible for paying some amount of the premiums, which is typical, then the employer will deduct this amount from the employee's paycheck each pay period. I want to review some real insurance premium amounts with you to make this concept more concrete, but first, a disclaimer. Premiums can vary widely based on factors such as plan, coverage, age of the employees, location of the healthcare, and structuring of the cost sharing. For example, if one plan covers more medical procedures than another plan, then the premiums will be higher. Or if a plan carries a lower deductible and lower out-of-pocket max than another plan, then the premiums will be higher. The takeaway is that there are many factors that impact premiums, and premiums could vary widely from plan to plan. Let's look at annual premium costs for one health insurance plan. This plan covers employees working at a big company in the US in 2025 and would be considered a good plan for an employee because it offers expansive coverage for medical costs, a large group of in-network providers, a low deductible, and a relatively low out-of-pocket max. In this table, you can see the insurance is covering just one person, the employee, and the premiums are split 80-20 between the employer and the employee. The total premiums paid to the insurance company for this 1 year is $11,700, with $2,340 of that paid by the employee deducted straight out of her paychecks. Now let's look at premiums using the same plan, but we'll increase the number of insureds. Under this scenario, 4 people are insured: the employee, her husband, and their 2 young children. The deductible and out-of-pocket max amounts have increased because the number of insureds has increased. Now the total premiums paid to the insurance company for this 1 year is $32,500, with $6,500 of that paid by the employee deducted straight out of her paychecks. That's a lot of money paid by the employer and by the employee. That's the end of this foundational video, but just a reminder that this video is part of a longer playlist. The playlist is in chronological order, meaning videos at the beginning of the playlist cover things that occur at the beginning of a job search and vice versa. If you liked this video, then you should check out the other videos in the playlist. If you thought this video was confusing, then try going backwards in the playlist to learn more about job search up until this point, or even forwards in the playlist to see how things come together. Thanks.